I just know she's not on, so
Got it.
hopefully not.
All right, guys. Well, happy Monday, and it's going to be an interesting week. It's election week, so that should be interesting to kind of watch what the markets do there. But let's kind of get right into it. So first off, I'm going to go ahead and share my screen and share. Let's move this bad boy over here. Let's open this up. So we're actually not too bad today, but the volatility is pretty extreme. Here's the movement today in the markets. If you look right here, we're at zero, we're up and down, and really down, and then up, and really down, and then up. So the volatility is kind of messy. Let's look to see kind of what's happening right now. So let's look at the markets. This is the candlestick chart. So we're trying to get close to this 25-day moving average. What's happening is we're starting off weak, and then we're regaining positive. So you'll see these, we had a couple days downward, we went pretty low here, and then we kind of bounced back a little bit. So even though it says we're negative, we're actually positive from the time we opened, if that makes sense. So we're showing some resilience here. So hopefully we'll continue to be flat and hope that we have some good news with overall with interest rates. Now, here's a shot at what the interest rates are doing, so you guys can kind of see what the average are. We're at the 7.25, 7.29 right now on a standard 30-year fixed. It's still high, and that's unfortunate. Like we all had talked about last week, we expect next year the rates to come down. So if somebody is buying right now, we will refinance them with no lender fees when rates drop. So don't forget to tell your buyers that if somebody says, we're just going to wait right now, appreciation is set to still appreciate. So if they buy now and refinance later, they'll get ahead of the curve by paying themselves principal and interest. Paying themselves with that principal and the amortization schedule is much better than renting. So people don't take that into consideration a lot. And the appreciation of that asset that they're buying over the next year or so. 3% of 300,000 is $9,000. So they would miss out on that too, as well, if they waited a year. And that's just based on 3%. So yes, rates are high. That's quite the spike we've seen, but we do anticipate once the Feds get after it, that the inflation will come down, and then rates as well. So as you noticed, guys, the Feds last week raised the Fed funds rate. And then what did it kind of went down and then back up again. Notice how mortgage rates actually got slightly better or no change when the Feds raised 3/4. So keep in mind, the Fed funds rate does not dictate what mortgage rates do, but it does dictate and help move the markets in different directions. Hopefully these next couple moves, we're anticipating another 50 basis points to 3/4 next month, in the month of December. Hopefully we'll see inflation lower, and then we'll see rates kind of come back to somewhat of a normalcy. So it is tough out there. The rates are unfortunately still in the 7s. Let me get back to that one. Or did I already close out of that? Let's go back to Mortgage News Daily. Mortgage News Daily, guy, it's a great website. You can always go there to check things out. You go home, and again, it gives you the idea of kind of where rates are. So notice jumbo is almost a full percent below the 30-year fixed. I mentioned this to you guys a little bit last week's. There's a full 3% spread between the 10-year and the 30-year. Usually that's 2%. So the jumbo markets are held by individual banks and investors. So they don't sell to Fannie and Freddie. They don't have the volatility. They keep them on the books a little bit longer. So you see a full 1% higher on a Fannie Mae note because the spread right now is 3% when it should be 2%. So we can get into that a little bit more detail if you have any questions on that. But rates are higher than they should be because they don't believe that that people will keep these mortgages. So they're gaining their yields up front because they know they're going to refinance them later. So that's basically the markets accepting the fact that they know and they anticipate rates to be dropping in the near future. When you see a big spread between this between these two on the Fannie Mae loans. ARMs aren't much off. They're about the same. So there's not a huge benefit to ARMs right now because we're seeing an inverted yield curve, but it's a little bit. So that could save something. But keep in mind, when you're doing an adjustable rate mortgage on a 5-year ARM, you have to qualify 2% over this rate. So on a 5-year ARM, it may be harder to qualify because they have to qualify at 8.95 on this program. Now, something you may not know, on a 7-year loan or longer on the term, on the part that's fixed, you qualify at the actual note rate, not the 2% over the note rate. So in this circumstance, you may say, "Ooh, I may qualify for more." That's not the case on a 5-year ARM. 7-year ARM are the same exact rate as the 30-year fix right now. So ARMs really aren't a huge benefit to help people qualify. We're going to get into that a little bit more as far as qualifications go. And I'm going to show you a little bit more about that in just a second. But right now, I know I did an open house this weekend. There's not a lot of people out there, a lot of looky-loos, a lot of people saying, well, I may just rent for a year. Let's look at a quick buy versus rent, and then we'll jump into some ways on how to make your payments lower outside of the normal buy downs. So this is a buy versus rent report that I just created. And keep in mind that this is for a short term. I just did 5 years. And if you look at the breakdown of this here, I'll show you what it looks like when I download it. I'm going to export this. I'm going to continue, download PDF. This is what it looks like if I create these for you. Save, and then I want to open this. So buying a $675,000 home versus renting, and I used rents. Let's see, what did I use for rents? I think it was 40. It was like, yeah, 4150. I just looked at Desert Ridge. I like that area because all the homes are very similar. When you look at the square footage and the bedroom count, and that's in the Phoenix area. There is a negative cash flow, so it is a little bit more expensive on the mortgage in the first year. And then the second year, you start paying yourself more, and then you have appreciation. The third year, you break even on the cash flow, but they're not taking into consideration in this chart the amortization gain and appreciation gain over a 5-year period. And this is based on 3.5%. So if somebody said, I'm going to wait a year, it's hard to argue that that is a bad choice. However, that's if they're selling in a year, because this takes into account them losing money on this, on the cost to sell down here. So let me zoom in on here. The cost to sell, this is real estate costs. So this is included in here. If you bought and then sold immediately after 2 years, yeah, it wouldn't make sense. But if you're renting versus buying, it does. And the long term is where you really see it. Because most people, you'd be surprised at how long people are staying in their homes. I think the average last time with people moving, buying and selling their primary residence is 14 years right now. People are staying in their homes longer, which is surprising to me because I seem to move every 5 to 6 years. So I just used a 5-year mark. So 5 years, if they rent it for 5 years, they're missing out on $119,000 in this model. So if you want me to run any of these reports for you, I am happy to do so. All right, so let's look at the topic of today, which is how do we help people in a higher interest rate environment? How do we help them get into lower payments? That's really what I'm really interested in. It's like, how do we, and this can take, this can really help in those circumstances where they don't qualify for what they really want. They make $15,000 or $20,000 off in qualifying for the home that they want, or maybe $50,000. What are some tricks of the mortgage industry that we can use to help them qualify? So I'm going to go ahead and see if I can zoom in on this. I'm going to move this over here now and share my screen again. So bear with me one moment. Here's a simple little report that I created with Mortgage Coach, which is what I use to show people kind of their options every month. Or not every month, their options on the different mortgage options available. So if somebody came to me and said, okay, I'm buying a home at 650 purchase price and I'm putting 5% down. this is that category, but this is taking into consideration that we're going to try to ask the seller to pay for a certain amount. We're going to ask for 3%. We're going to ask the seller to pay 3%, and we're going to look at what that would look like for payment wise, doing a few different things. So the first off, this column is asking for 3% and then telling us that we want to pay for all the closing costs, pay all my closing costs, and then whatever's left over, buy down the rate. So we're buying down the rate to 7, which isn't a lot, but we're using the closing cost credit to buy down the rate to 7, and we're paying all closing costs. So cash to close is about $30,000 because really there's no fees, but their payment is what I want to focus on. Payment is $49.53 in this category. This is 5% down with these sellers paying all your closing costs and using the extra, which I think was about $3,000 to buy the rate down. So this is a normal paying the closing costs, buying the rate down a little bit, you're at $49.53. So if we look at a payment breakdown, we have principal and interest, property taxes, insurance on the property, and then mortgage insurance. I want us to focus on this for a second. Now I'm going to take the exact same scenario. The seller is still paying the same amount of money. And I want you guys to know that we can use the closing cost to buy out the mortgage insurance. I'm sorry, we can use the seller's credit to buy out mortgage insurance as well. So we already know about buy downs, rate buy downs, it's temporary and permanent. But what about buying out mortgage insurance as another option to get the payments lower? This is another. So did you know also you can pay half of the mortgage insurance to make it cheaper? That's called split edge. So if we take that 3% seller credit and we applied that towards paying down the mortgage insurance a little bit, and then putting some towards closing costs. The closing costs on this one will be about $7,000 higher. See that down here, $7,000 higher than here. But the payment is about $120 lower. So you can pay the closing costs and you can buy a little bit of the mortgage insurance down, paying it down a little bit. Now, what would it look like if you, remember, we're focused on payment right now. What would it look like if we said, you know what, I just want to take the seller credit and pay for all of the MI and buy the rate down a little bit? So what would that look like? Buying out the mortgage insurance completely, and then also putting the rate down a little bit. So we're going to buy the rate down just a little bit. It's only an eighth to 7.125. And we're looking right here at a total payment of $46.55 compared to the upfront where we pay the closing costs of $49.53. So we're a good $300 savings. All of the mortgage insurance goes away. So that's another way of getting the payment to be lower, is buying out, having the seller pay extra to buy out your mortgage insurance. So a lot of people don't think about that as an option. And guess what? You can do a buy down and you can buy out the mortgage insurance. You can, remember, on a conventional loan, if you do 10% down, you can get up to 6% seller credit to buy out mortgage insurance and buy the rate down. And then if you did a 3% towards a straight buy down, you're actually more expensive, $46.93 compared to $46.55. It's more expensive to buy the rate down than to buy out the mortgage insurance. So just an idea. Another thing to consider, they do have a bigger tax write-off here. So even though the payment's the same, there is a big tax write-off. However, the amortization schedule may be a little bit more favorable on this side. So I want you guys to just know that if you're in a bind and you're not quite qualifying, if the debt to income ratio is off by your lender by like 1% and you can't figure it out, you can opt to buy the mortgage insurance out on a conventional loan only. FHA, remember, it's permanent. On conventional loans, you can opt to buy out the mortgage insurance altogether, pay a little bit of it, or obviously you can pay off closing costs. So I wanted to make sure you knew this was available. If we look at the overall savings differences, this is paying all the closing costs. You're not going to save any of this. This is what we're comparing against. To do a partial pay of the MI, it's about $123 savings. To buy out the MI altogether, it's about a $300 savings. And to buy the rate down with the same amount of money, it's about a $255 savings. So if you have buyers putting less than 20% down, look at this as an option. We can do these side by side and talk to the buyers about it so they can kind of see what they can qualify for. more by buying out the MI. So just another tool that we use. So I bring up these circumstances because this is kind of the stuff I run into on a daily basis. If somebody, they're going back and forth, they're pre-qualified for 350, they're making an offer at, and let's just say the house is listed at 375. They make an offer at 350, the counter is 365, but they just don't qualify. This is a way of figuring out a way with the seller to get their payments down so that they can qualify. So that is the MI buyout. I don't know if you guys have seen that before, but do you guys have any questions regarding buying out the mortgage insurance and buying the rate down? A lot of people don't know you could do this, so I want to just make sure that you guys know you can. Now you can do both at the same time. You can buy out all of the mortgage insurance, and you can buy down the rate significantly as well, depending on how much you're able to get from the seller. And again, if people are just not qualifying, just a little bit off, you can negotiate with the seller to try to figure out a way of making it work. So I want to make sure you guys knew that tool, because it has helped me on the processing and underwriting. When people do weird things and buy cars last minute, believe me, it happens even when I tell them not to. They say, but I didn't buy it, the company did. I'm like, well, did you put it in your name? Yeah, but the company's paying for it. Well, guess what? They put in their name, so now they have to count that against them. So some savior things, where we come in the middle of the last minute to fix things, are things just like this. Any questions on mortgage insurance and how to buy that out and get rid of the mortgage insurance? Another trick is that I didn't really put up today because it really doesn't make sense in today's market, is lender paid mortgage insurance. That's where the mortgage insurance is built into the rate, and there's no monthly mortgage insurance. That doesn't really make much sense right now because rates are already really high and there's not much higher to go. And then there's also the option of doing a first and a second to avoid mortgage insurance. So these are all ways and strategies of getting these payments down so that people can help qualify at the higher rates. But keep in mind, if you pay a lot of money to get rid of mortgage insurance, if you refinance, you'd have to do that again. So sometimes the strategies are more important than the tools. So we need to really look at that as well to see what the long-term strategies are for your customers. Any new success stories out there on open houses? What are you guys seeing as far as the volume out there? I know we're just coming off of a weekend. I did an open house this weekend in the Prescott area. We had probably 5 or 6 families through. A couple of them were neighbors. Any positive, exciting, high traffic open houses you guys are holding? Don't be shy.
Hi, this is Tara.
Tara.
I had an open house on Saturday and I had 18 groups through.
Oh, wow.
So it was a very huge success.
Okay, that's great.
Yeah.
That's really good news. I did personally 3 pre-qualifications this weekend. It's been slow in past weekends, so that's a good sign. I do feel like the psychology has changed a little bit with buyers. They have accepted the fact that rates are high. And some of them are saying, well, you know what, let's just move forward, because if we keep waiting, keep renting, we're not going to have an actual home. We're going to be renting, and who knows what our landlord will do next year. And that uncertainty definitely helps buyers get back in the game. But I am seeing the psychology switch with buyers. They're just knowing that the markets and everything are predicting lower rates in the future. They are going ahead and pulling the trigger and moving forward. So that's good news. So the number of pre-qualifications that we're doing is significantly higher than it was a month and a half or 2 months ago. And then don't forget that we do loans in every state now, except New York and Hawaii. So we can do loans, and I do them myself. I am the one that facilitates. I'm not handing them off to somebody. I can do the loan in every state except New York and Hawaii. So if you have anyone that's listing their home to move and they don't know anyone where they're moving, we can handle that all locally, regardless of where they're moving to. So we're doing loans in Alabama, Boston. We have one closing in Florida. We have a couple in Georgia we're doing. So literally every state. And what's nice about it is the processing team that we use is processing team for that state. So even though I'm managing it from my team here, our processors know all of the local rules for that region. So it's kind of nice. And because we are a bank, are partnered with a bank, we have all of their bank products as well. So we've got second home products that are really great. We've got this wealth builder loan, which is a 0 down, 100% financing, up to $975,000 on a 20-year AM with no monthly mortgage insurance. Now that loan right there has so many bells and whistles, like it's hard to even say it because there's so many fun things about it. But 100% financing, 20-year amortization, rates are in the 6s right now, and there's no monthly mortgage insurance. So it ends up being a better payment or a similar payment than a standard 30-year fix with 3% down with mortgage insurance. But the amount of money you're paying towards principal is 3 times as much. So you're paying yourself a significant amount. So great loan. We have a lot of those unique products now that we do have. We have a mortgage broker side, we have a mortgage banking side, and we have a partner that has a bank that is a bank that has all of their unique in-house products as well. So we literally have the trifecta. There's nothing we can't do. So it's really exciting. And if you guys need any of those unique out-of-state products as well, then I am always here for you moving forward. So any questions as we move forward with our week? So it's going to be an interesting week with the election. It's going to be hard to say what happens. It's kind of all over, and it's kind of usually a really stagnant time, and then it gets kind of volatile once we hear who's won, who's lost, and all that kind of good stuff. So it should be an interesting week. Don't forget to get out and vote if you haven't already, and have a wonderful week, guys. Any questions on anything specific that you have? I'll stay on for a little bit longer if you guys do want to jump in. And if you guys need any marketing materials, open house flyers, the seller buy down information, whatever it may be, we've got a ton of tools. We also have a new app that gives you total access to everything that's going on with the loans that are in process, the pre-qualifications that are in process. So we'll make sure you guys get that app as well. It's called Element. So we're going to go make sure that each and every one of you have that in the next couple weeks here, because that's we're just going to reach out to you individually, email you guys a link to get it. Once it's downloaded, then we can kind of go over and I'll do a little class on how it works. But it's really cool. You can see literally everything that's going on with the loan. You'll get alerts on what's happening, little dings on your phone when like the wire has been requested, appraisals are in, all that kind of good stuff. It's all automated now. We'll still do the every Friday LSUs as always, but that's just going to be an extra updates that you guys are going to be getting along the way. So any questions? I am here.
Sean, Noelle
Yes.
has a couple home tours that she wants to mention that's going on this
Oh,
week.
Yeah,
excellent.
just waiting for my time to shine. Just
There you
kidding.
go. It's your time to
There you
shine.
are.
Okay, so Wednesday, so this Wednesday we have our 85254 tour. So that's going to be at 9 a.m. and it is going to be at Sushi Crush on Greenway. So if anyone's interested in that, that's another tour that we're adding. And then the Desert Ridge tour is going to be this Thursday as well at the Keller Williams at High Street. And that starts at 8:30. So if anyone's interested, let me know and I can send you more information.
Fantastic.
Yeah.
All right. Well, it's another week. It's Monday. We'll be here all week. And there's a lot of illness going around. So just wash your hands a lot. Stay clear of the sick ones and let's get after it. So have a wonderful week, guys. Anything else? Any announcements anyone else has? Any special listings anyone has that you want to tout that maybe get somebody interested in? Let me know. Or pop up and this, raise your hand or speak now or ever hold your peace. All right. Enjoy your week, guys.
Sean, do you know who Susie was in the Zoom?
Yes.
I believe it's Susie Klein.
I was gonna say, is it her? Okay, is it Susie Klein? Okay. I think I have her information. She just asked about the tour on Wednesday, so I'll email
Yeah.
her about that.
If you don't, I have it, Noelle, so I can send it to you.
Okay, I think I have it. She was Yes, I have it. She's
Okay.
with.
She's with
Arizona
Arizona Best.
Yeah.
Yep.
Okay. I was gonna say, I thought she was with Kim Cooper. Okay, I'll follow up with her, but you guys have a good day.
Thanks,
I'll talk to you
Noel.
guys
Thank
soon.
you. Have a good day.
Feel
Bye, Frankie.
better.
Oh, I hope.
Okay, bye.